Hello, today is the 3rd of June, 2023. As always, we will start with our disclaimer. We'll go over our calls and make some predictions. This is my trading plan for Monday, which is June the 5th. Please remember my calls can be completely wrong. Any trade you make should be made at your own risk. Now, David has a great video describing one of his proprietary techniques. The link is right here. YouTube gives me trouble when I try to post it directly, so you'll actually have to copy it. He has a few more videos, a few more live analysis sessions coming up next week. I'll post the links, but if you subscribe to his channel, you can get these without waiting for me. Don't let this opportunity pass you by. Well, let's go over our call. We look for the pattern with the early high, which is this, and then Monday we also think we'll have the pattern with the early high. We said that Thursday's action was negative, and unless we gapped and promptly took out this high, we should see lower prices. Well, we gapped and took out this high, so there was no call. It's a reminder of what we said. Bulls did what they had to do. These are the patterns I expect to see next week. We gapped up, hit higher highs, closed under intraday highs. If that's maintained at Monday's open, you should see lower prices. Doesn't mean that you'll close lower. It's particularly negative on a Friday because usually retail customers aren't going to start selling when the market's going up like this, and when there are fewer sellers, prices tend to keep going up. All this changes if we take this high out early, and that we're not going to know until Monday. Time hasn't run out on this 41.85-43 target. It runs out early Monday. I think barring some kind of news event, that's not going to print early Monday, so we'll have to add this to the list at that time. During the day, MEJT did say higher prices were coming. A buy signal means higher prices, doesn't give an entry. That marked this drop as a false move. But we've already traded as high as we had to go to satisfy the signal because the minimum target printed immediately. Well, this is DeMark's TDST line. What we've been waiting for confirmation that we've broken through it is one bar completely over the line, and then the second bar completely over that first bar, and now we have that. So this is confirmation. So this is his signal that we've broken through resistance. Now any signal needs to be confirmed, which means we have to trade 1 penny over Friday's close on Monday for confirmation. If the market continues going higher, that shouldn't be too hard to go 1 penny over that, but if we gap down and hold the gap, this breakout doesn't really count. We have a number of signs that we're overextended. This bar is almost completely over the upper Bollinger band. VIX, the volatility index, is at the lowest it's been in nearly 2 years. It's under its band. That's a sign that the market's overextended because the VIX indicates what kind of premium people are willing to pay for puts. And when they're not willing to pay much of a premium for puts, it means they're all overly enthusiastic about the market. When people are overly enthusiastic about the market, it's pretty negative if it's at the end of a long rally, because that means everyone's pouring all the money they have into the market, and when all the money's invested, there's no money left to buy. But when you get overextended like this at the beginning of a rally, it's actually positive. It means everyone wants to get in, but they have lots of money to invest in the market, and it's a sign that higher prices are coming. Doesn't mean they're coming on Monday. We've now cleared the TDST line from DeMark on the weekly chart, and we've also maintained a bar completely over the 89-week moving average. I anticipate any corrections will stay over this average, and that's now at 4170 and change. So I think any correction here is going to be very well contained. Well, here's our long-term count. We've completed a huge ABC. We're in a rally up. We've probably completed wave 1, and we're waiting for wave 2. We've now rallied right into the resistance of a prior consolidation, which you can see on the weekly chart. And we've also hit a Fibonacci target at the high within 1 point. This is Gann's square of 9. We're starting to count from the October low on October 14th, and closest point was 3492. If you trace along this major axis, you see today, June 3rd, 2023, is one of the possible dates for a top, for a change in trend. And if you go along the same major axis, you see Friday's high, 4290, as a possible price for a top. So according to this technique, we have a correlation of time and price right at Friday's high. Now, just because that works, it doesn't mean other things won't work too. It's a squaring of time and price, but if this does hold, we're within 1 point on the fib target, where we are right at overhead resistance, all on the nose. So if it holds, at least it has some kind of credence, even though I think any correction is going to be mild. I've moved point A over to here. I think it's at least finally possible to get some kind of wave count which doesn't look forced, which justifies this wave as being over, but that doesn't mean other counts won't work, and it doesn't mean we should ignore breaking over this major trend line, which just needs to go 1 cent higher for confirmation. If you take the early May high, the ABC works perfectly, and you can now count A and B and C equal to A right at the high. I mean, doesn't mean the count's right, but at least if this holds, and it's a candidate to hold, everything fits. We won't know if that's going to hold until Monday. And if you look at the shorter term time frame, everything balances out too. I mean, it doesn't balance out to the penny, but it's really close enough for me. That's 5 waves up, everything fits. It's a candidate for a top if that holds. We keep moving up way over here, the whole idea falls apart. Monday's pattern has the early high. We could still gap down. It tends to be a rally day with a fine lower high, but if you fail, it's a straight line drop. We gapped up, hit a higher high, but closed under midday highs. And unless we gap and promptly overtake Friday's high, we should see lower prices Monday, even if we don't close lower. Friday's rally broke through major resistance. We only trade 1 cent over the close for confirmation on Monday. Long term, we should trade much higher. Any pullback is likely to be contained by the 89-week moving average. However, we're now rallying into resistance. We need to pull back at some point to complete wave 2, and both the volatility index and the NASDAQ McClellan oscillator are extended past their respective Bollinger bands and reversing back through the band, which hasn't happened yet. But if they do, that's a sign of a change in trend. So they're at places from which a short-term correction could originate. The wave count and square of 9 also allow for a drop if we don't trade significantly over Friday's high. So we're still looking for some place for a correction before the real powerhouse rally begins. This is a reasonable candidate. If it holds, we should have a straight line drop, and if we keep going up, we're going to have to look for some other place. So the pattern with the early high, it's either a strong rally or a straight line drop. I think it's going to be clear early on which of the two happens. And that's today's call.